Good morning, everybody. Jack Leeson with StartupTrading.com. It is February 6th here, and the title of the video is Long Continuation Setups from the Prior Day. So we're going to take a look at what those are. First, just want to back out on the higher time frame here to the daily chart. We're approaching, get rid of some of these draws. We're approaching, this, we've been in a flag basically, and with that September 11th extension anchor being the eventual breakout target, assuming we continue on the path. But we've held this extension multiple times, and we've made lower highs throughout this move down. And if we can start breaking out of this flag, which very well could happen, by the end of tomorrow. I mean, between Amazon and non-farm payroll, this very well could be just shattered. And that upside target is 23,205. So I just want to keep that in mind here as we go into the biggest news events remaining. Now, we also have a pretty technical bid that we've been seeing to the upside. We had this traditional 12 o'clock complete yesterday, and then the best entries unfortunately into this have all been overnight, middle of night, pretty damn early, 5 a.m., 4 a.m., 4 a.m. East Coast time. So I don't know who's up that early, but if you are, those unfortunately have been the best entries. Been times we're not at the desk. We have completed both of those targets. Now, it is totally possible, and it would probably take Amazon's earnings to do it, but for us to come down into the next traditional from Wednesday's low, and that's going to be my discount window here for the day if we can get all the way down there. But what's, I think, a little more likely to happen here is yesterday off the open there was a traditional on the back of PMI that ran through targets, and we began an extension, and that extension from 10 a.m. to high traded towards the end of lunch. We got a new high. We came all the way back down into it and then completed targets. Now that same anchor new high has traded here this morning at 7 a.m. And we've been bid out of it. So as we go into the open, my bullish above bearish below line in the sand is going to be this setup, this extension from that 10 o'clock time frame high to the overnight highs. And if we break it, expect the full traditional. But right now we've reacted to that 50, the 38 reacted here at 8:30. Unfortunately, we may just be ripping right off the open without retesting that support level. But if we do, I will look to engage that as a trade, that 21,723, and that upside target is going to be 21,881. Now, if we just decide to go up through those overnight highs, another thing to be aware of is you could also consider this extension to be from that Monday night high. It's basically the same anchor, and we've gone through that negative 23. It's on the higher time frame, but if we go through that high, I'll just be adjusting to highs and probably looking at that 38. So it'll be, if we don't retest this 50, it might be some time before a really solid setup occurs. And then moving on to the S&P 500 here, guys, we have the traditional that traded same time as the NASDAQ did. You got that Monday, Tuesday overnight, and then Wednesday morning we get a little bit of a deeper pullback in the ES compared to the NQ. But what we had here on the slow PMI candle, 25 points, ATR rejection, so that's when you ATR down or up, so larger than 1.5 times the average true range. That's why these bars are yellow. We immediately begin a traditional series out of that, and then we began an extension at 11:10, traded during lunch, traded in the afternoon, and then once again this morning that 11:10 anchored a high, traded its 38% retracement, and we're already back on highs. So that's going to be the thing to watch here. Now, another thing I'll want to pay attention to is if you go to the RTH session, the ES is going to be blowing through the negative 100 of the first time this extension anchor traded. So if we do just rip up through highs, which is what it's looking like we're going to do, the first ES pullback, we more than likely will not get this anchor again from 1105. We will then instead get a different anchor from the I like to watch the first move to go through its negative 100, and that's going to be the 1205 high to high. So 1205 high to high may be as deep as we get a pullback. So if even if I were to draw that to this high here, and then kind of match it up with something, I would look at a 60.91 half. It's going to be a little bit ahead of that 87. So 60.91 half would be that first actionable level. Now if we continue to rally it, we'll just have to adjust that anchor and pay attention. But right now I would be willing to buy the 50% retracement of the 1205 anchor in the ES, and that actually may be the best setup here that I'm looking at. So that's what I have for these indexes. And then if I look at, let me show you something. Yeah, that's really all I got. I'm just looking, seeing if there's anything on gold or oil real quick, and if there is, I'll bring it across the screen. But I don't see anything that's really set up right now. So I'll share these levels with you guys in the room, and then we'll see if we can get either that ES set up to trade or maybe that NQ retest. Take care.